Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on XLK, Apple, and Facebook on the daily, weekly time frame. So just when we started to consolidate, the bulls come back with a vengeance. So we had the reaction to the House voting on the tax plan going forward, and that was pretty much priced in by the time the vote actually came around, but it was a very bullish reaction from the market to that. And again, remember that that is what has the market has been pricing that in all of 2017 since the election. It is the potential for tax benefits of all of these companies that is seeing this market run. So the bulls buying the dip and negating, we see this bearish TCG cross, we got right on top of it, just barely going through, and this candlestick really saved that from crossing. So we're looking right back up at the high here of 64.02. We have a new support down at 62.70, the low that we saw on this pullback. So the bulls are clearly showing that they can just turn right around and run things very easily, which means we don't want to be going bearish. And whenever I'm talking about weakness, the only thing that I would be doing is taking off bullish positions, maybe lightening up a little bit and getting cautious. But in terms of going bearish, there is no reason to go bearish in this market in what we're seeing going forward, really all of the last few months. And it's hard to imagine what it's going to take to derail this market. Perhaps a black swan event. I don't know what it's going to be, but it's really hard to go bearish, but also need to always remain cautious. We can't just become blindly bullish and just think this is going to last forever, because it's not. It is going to last for now, but I will always be protective and not want to give back any of these insane gains in 2017. So that's where I stand. In terms of this middle Bollinger Band, it's still holding as support. The last consolidation we had, we bounced just above it. Here we go again, bouncing just above it. And the weekly time frame, we were looking at that bearish reversal doji. We were starting to confirm it with the lower high and lower low this week. And this one day today completely saved this weekly candlestick. Obviously, we have one more trading day left to go, but unless we see a complete turnaround and give all of it back, it's going to be saving from any kind of confirmation of that bearish doji, and it's going to keep the bulls in full control. So we knew it was healthy consolidation on the weekly time frame. We were just cautious because of the loss of the exponential supports on the daily. But again, just a complete turnaround where we had a very strong open and the bulls ran with it. Apple, not as strong as the tech sector overall. We did bounce and see a significant follow through, but it's an indecision candlestick and we rejected from exponential resistance. So if the bulls want to regain momentum fully on Apple, we're going to have to see a top of this bounce. Perhaps it's at 171.87. We're going to need a little higher low compared to our new higher low on the daily of 168.38. Need a little higher low and then a higher high if we're going to really reverse momentum back for these bulls. Otherwise, it is just a short-term bounce at this point, and it's going to take a lot of work for the bulls to get back towards that all-time high, because we did pull back significantly these 4 days, and this 1 day of bounce is not really changing that at this point. Very healthy weekly consolidation, no red flags whatsoever for the bulls, holding exponential support, and after 3 weeks of breaking out, this is a healthy little breather, so to speak, for the bulls to cool off and consolidate. Facebook with a bull break. We had the bear break with the gap down open. The bulls bought that gap down open yesterday. We broke support of 176.71, but we maintained the middle Bollinger Band support for the second day in a row after touching it. And now we have broken a bunch of resistances today. The next key level is 180.75. If we break 180.75, we can be looking back for a new all-time high. Otherwise, it is just a little lower high here. Still certainly very healthy consolidation, but if we don't break 180.75, we are still in consolidation mode. The weekly time frame is a bull flag, so we can certainly be looking for the bulls to show up, and it would require a loss of the middle Bollinger Band to change that. But nice solid bull volume, the highest volume that we've seen in a couple weeks, and we're looking up at that resistance of 180.75 as we head into next week, and we'll see if the bulls can get over that level to join some of the stronger tech names like Amazon, which is looking for an all-time high tomorrow. I appreciate you watching. We'll see you over the weekend. Have a great night.